All right, welcome. We made it all the way to Trending Thursday this week. So another fantastic market week. I know all of you have been glued and tuned into the markets. It's my privilege to be here. My name is Steve Chappell. I'm the Director of Trading Systems Development for VectorVest. I've been around, my goodness, I was thinking about that before we started today, and it'll be 24 years, October the 4th. 24 years I've been here at VectorVest, so it's been quite a ride. It's my privilege to be with you folks. I love getting in front of our subscribers and potential subscribers and sharing all the information I can about how to make money in the markets. I mean, that's what it's all about. Independence, and being able to do it for yourself. So I like to teach people how to fish, not do all the fishing for them. So you'll definitely get a little bit of that today. And we also have a very special guest, Joey, isn't that right? We've got Ron Wheeler coming on in about 14 minutes. And he's our options guy. And I've met a lot of great option traders in my day, spent a lot of time with a lot of good folks, and you're in really good hands with Ron. So you're going to want to pay close attention to what he's going to be sharing with all of you folks today as well. But before we get there, we want to build the room up here a little bit. Let's make sure we cover what's happening in the stock market right now. So I'm going to get over into the VectorVest platform here for a second, and let's at least first just take a look at how the major indices are coming in for the day here so far. So no real surprise. Russell is out in front, and that's been the laggard market indice. It looks like it's up over 1% so far today. NASDAQ, I mean, that's the future, right? So again, not surprised to see strong performance there on an up day, coming in about 0.8. VectorVest Composite, 0.6%. So all said and done, that's your market average movement today, which is a pretty good day. And more importantly, one thing I like to do here just quick is just set the stage for, what's this guy thinking about the markets? What's VectorVest's kind of stance on the markets right now? Well, overall, we don't advocate buying any stocks at this time. That's because the short-term trend of the market has deteriorated just enough to where we want to be a little bit more patient here in terms of buying the dip. But we're not all that far away. It's hard for me to read some of the numbers here. But we're not all that far away from turning back to an up. So I'll show that here in a sec. Let's get to it. I'm going to go to the market timing graph here quick. We'll pull it up, and I've got a nice little line drawn out for you. And it comes off of this consolidation from back in, beginning of the year, January through mid to late February, where the markets really hit a ceiling. That's before, of course, the tariff situation hit, and then we've rebounded all the way. The nice thing that we see here currently is we're retesting the breakout of that level that we saw just a couple weeks back. And so far, so good. I'm going to zoom in a little bit closer so we can see that a little bit more carefully. What you have here now, reversal patterns, you need prevailing trend into the pattern for it to be a valid pattern, quote unquote. Having said that, the change in sentiment, the change in supply and demand balance is still very well depicted by what you see here. And so these prior two bars, you see the tall red filled followed by the unfilled little green there. That's known as a bullish harami, okay? And you're seeing change in sentiment from yesterday's close into today's open, or yesterday's open rather. And it carried through the remainder of the session, which is good. That's how you have the unfilled body. And then today we're opening higher, of course, and we're confirming that pattern. On a harami pattern, confirmation level is either the midpoint of the red or the close of the green, whichever is higher, which I believe, when I could see the bars a lot more clearly this morning, the midpoint of the red is a touch higher there. So hopefully you can witness that as well. So you'd use that as your confirmation today as as a true gauge of change in sentiment from a more scientific standpoint, if you will. And it's carried through on the session. So it's really, really good to see that. Nice little turnaround. Now, having said that, we still very much are sort of range bound here a little bit, and that's okay. Inevitably, you'll feel really good about buying stocks again if the markets can push on to yet another new short-term high. That's the ideal situation. You feel pretty good about it now, honestly. But from VectorVest's approach, we'd really like to get above the close here at the very least. And the nice thing about that is that takes care of the sideways consolidation that we're in. So just a quick look at the markets for those that may not be as familiar with them before we bring Ron on. What I'm going to do is just go through each one of them individually and talk a little bit about why we said some of the things we said earlier on. So this is the S&P 500. You can see we're now out floating in what I would call the blue water. We're out at all-time highs and just off the all-time high right now, which is really good. So there's really no technical obstacles that the market has to get through. The other nice thing, you often want to consult fundamental analysis as part of your equation, right? And we're off to a pretty good start on earnings season. There's going to be an awful lot of talk about the Fed and interest rates and all that, but the real reality here is you want a good earnings season, no matter what the case. And so far, so good. We'll see how it goes as we get a little deeper in. I think I heard this morning on CNBC, we're somewhere in the neighborhood of about 8% have reported so far. So we're very much in the early innings. A lot of folks expected good bank earnings, and of course, by and large, that's what you got. Looks like regionals are really coming out smelling like roses in a lot of cases as well, which might be a bit surprising. But anyhow, so far, both technically and fundamentally, the market still seems to be clicking along here pretty good, particularly the S&P. It's out there floating away. And if we look at the next one in the line here, that's going to be the NASDAQ. Of course, it's got even a stronger surge. And you see this little retest of the breakout. Those are very common, and you feel really good when markets retest, past that retest, and then start to explode up off that level. So NASDAQ looks fantastic. And again, we've said that's the future, and hopefully you think the same way, because that should be self-evident. But really, really strong performance out of those two market indices. Then we get to the tale of two cities, right? Or in this case, 4 cities total, right? 2 of them that are underperforming and 2 of them that are outperforming. But the Dow is really struggling with all-time highs and still looks to be at this point. However, with a keen eye, you might notice that as a flag pattern there. And generally speaking, I don't want to go too far off the deep end here, but since I got a little bit of time to kill, generally speaking, if we break out of that sideways to down consolidation, this is about how much it should travel up out of that pattern. Now, it's important to also understand that your initial target is just the prior swing high, which is resistance, right? But should it peek through, generally speaking, that's the kind of target that you're going to be dealing with going forward. And that would mean a lot higher prices on the Dow, wouldn't it? So that's something to look forward to. If this index can break out, you check the textbooks if you don't believe me, but that's how you target a flag, okay, on where price should travel in the future. Now, the problem with those kinds of extrapolations into the future is you could hit a really bad patch of news that the market isn't factoring right now, yes? And with the kind of news cycle that we've been here lately, with a very active, let's say, Washington, D.C., and so many other things these days, who knows what the future ultimately holds here. But that's another way to look at it and give you some anticipation on how the markets are at least likely to perform on the breakout, okay? And then we get to the real laggard, and that's going to be the Russell. And it makes sense. These are the small caps. These are the stocks that when turbulent issues hit the stock market and these kinds of things, I mean, they're going to suffer the most. And so they're really trying to tread back here. And I've been encouraging folks to think about doing some investing in this circle, because inevitably, if the markets go higher, I like the Russell to try to catch up just on market maker, not market maker per se, but big brokerage and hedge funds. They're going to be looking for places to put money to action that's not so saturated. And so I think that this is a logical extension of that. So we've been kind of eyeballing this as a potential playground of opportunity as well. All right, so with that, the really good news, so far so good. We've seen a little tiny bit of turbulence here, but it looks like, at least for now, that the floor may in fact hold and we might push on to yet higher prices. So big earnings season. Can't understate that. And hopefully that will happen, and it will prevent a phenomenon that we've written about at VectorVest for a long time, and that's a phenomenon called the July high. So you run the risk in the summertime of light participation across the markets where kids are going back to school and all that kind of stuff. And I don't know if you remember the old adage, it was sell in May and go away, And a lot of that was, as you got into July and certainly even August, markets don't tend to perform that well. However, a good strong earnings season, and we got some nice legislation on tax cuts and things like that. Markets are going to take pretty keen to it. And if you could just get a little bit of a wrinkle in the face of Mr. Powell, maybe alluding to the fact that they're getting more and more interested in lowering interest rates, you could have a perfect storm there, should that prove. Now, I'm of the camp where I think that you're probably just going to continue to hear more of the same. However, he does like to forecast his moves from what I've seen so far, at least in large part. So who knows? Maybe he'll sneak something in there that the markets will like this time around. We'll just have to wait and see. But, interest rates relatively low in the grand scheme of things. I know people don't want to think of it that way. Inflation, relatively low in the grand scheme of things. So good earnings season, and you kind of have a perfect storm brewing here, particularly if the Fed can just give it that little tiny nudge that the market so desperately desires, it seems. So anyway, that's all I've got here. I don't know. Hopefully, Ron is ready, willing, and able to jump in. So, Ron, listen, I'm just going to do a quick introduction for him. Ron, as I mentioned earlier, but we got people piling into this room all the time. Ron is a terrific options traders guy, guys. He is a master, and he's a master of what I really love, and that is creating wealth through option trades that take in income trading. And so I'm going to let him explain how he does that, but he is the best I've ever seen at it, and I hope you find him just as interesting as I do.
All right, we're not getting you, Ron. So Ron, we can't hear you.
Do I need to take back up?
Just tell him we can't hear him.
Ron, we can't hear you, bud. Are you muted? Well, I can just take it on through if you want.
Yeah, muted somewhere. Go ahead.
Well, we have some technical difficulties, and so I will just plow on through. If we get an opportunity, we'll bring...
Try it now, Ron?
Can you hear me now?
We hear him now.
Take it away, Ron.
Good? All right, awesome. Well, good. It's strange. I do these webinars all the time, and it's like it works in 1 second and it doesn't work the next one. So thank you, Steve. I appreciate you having me on. And so as Steve mentioned, my whole thing here at VectorVest is income trading. And it's not just at VectorVest. This is something that I've kind of come to and became with really in the last probably 15 years. I've been trading now for 28 years, I believe it is. And I started out as a commodity trader, trading futures, doing day trading, trading things like corn and wheat and all that stuff, spending 8 hours in front of my computer every day. And after a while, it's just not something I wanted to continue doing. So I was kind of searching for another way to trade, to continue making the money I was making, but was more of a hands-off approach. So it kind of fit me right into the old thing of like, what would I do as a retiree where I didn't want to spend 8 hours in front of my computer? Well, I got lucky, because my mentor who kind of brought me into the industry had just started really working on a lot of options research. And he kind of brought me into some of that options research, and I discovered the beautiful thing about selling options, and I had some people teaching me how to do it. And selling options has become really my go-to, because in order to create a trade where you can create income, and let me kind of explain that a little bit too. When I say create an income trade, income to me is kind of like you would buy a stock that pays a dividend, right? You don't have to do anything to get the dividend. You just have to own the stock. You don't have to watch it every day. You don't have to trade it every day. You just get the dividend because you own the stock. That's all, it's kind of like a paycheck, right? You go to work, you get paid, hopefully. You're looking for money that's going to come in. And the key of what I say to this is, you can make the money even if the stock doesn't go your direction. So if you go to work, you have a bad day. typically you're not going to get fired after one bad day. You're still going to get your income. You're still going to get your paycheck. If you buy a stock that pays a dividend and the stock doesn't go up, it goes down. Okay, yes, you lose on capital appreciation, but you still get paid that dividend. And that's what's really the key here. So what I do is I use options to create scenarios where you can get paid, create a trading situation where you can make money even if the stock doesn't go the direction that you want to. Now, I've been doing this here at VectorVest now for a decade. It's been one of our more popular approaches. We do this every week live in the Ultimate Retirement Solutions coaching group that I run. And here's what I want to do, just to kind of give you guys an idea of what we do. I'm going to try to share my screen here. And there's my screen share. Hopefully everybody can see my screen. And I'm going to share something with you, and you might not be able to see it perfectly, but here's what I want to show you. So this is my spreadsheet of all of my live trading activity. So every Monday in our coaching group, I look for trades. So what you can basically see, and I do this on Wednesdays as well. So if you look in the upper left-hand corner, I only trade essentially 2 days a week. You may see some Tuesdays on there. You may see some Wednesdays. And that's because of holidays and things where I have classes on different days. But starting in December 30th, and I put this on my list, I knew that if I took a trade December 30th, it wouldn't close until 2025. So far this year, and you can kind of see a lot of Mondays, a couple of Wednesdays, a lot of Mondays, a couple of Wednesdays. So far, I've taken about 76 trades. That's column. So typically, I trade stocks about 10 to 15 trades a month. So not a ton of them, but it's something that's comfortable for me to manage. Now, you can also see that since April, I've done nothing but bullish trades, bull puts. And I'll explain that to you guys here in a couple minutes. Occasionally I do bearish trades, bear calls, bull puts, bear calls. That's it. Those are the two trades right there. Bull puts, bear calls. Bull puts when the market goes up, bear calls when the stocks in the market are going down. Now, kind of scooch over here to the end. And I should probably, not on the screen, on the actual screen itself. All right. So in the upper corner here, it kind of gives you a rundown of what my trades are for the year. So out of the closed trade, I have 43 winners, 28 losses, and about a 60% gain. Now, or a 60% win rate, which for me is pretty typical. I tend to trades that are less monetary. So I usually get my win rates in the 60%. Now, here's another cool thing about this. The average trade is 742. The average losing trade is 769. So my wins and my losses are very, very similar. My average days in trade is about 9.1. So this is not something you're going to day trade. You're going to be in these trades for, on average about 9 days. Now, I trade $100,000 in capital, okay? Of that, right now in my open positions, I have 5.4% risk on. Now, by the way, if you really like the spreadsheet that I've got out, we give this to you if you join me for options trading. Now, over here, and I know it's a lot of information, I'm sorry, but I like to use real stuff here. I don't like to make things up on the fly. You can say here up a grand total of about 10% for the year through July. Now, 10% through July is not bad, but that's one prong of my income trading. Trading I do for income is based on the S&P 500. Now, this is a little bit more of a, I guess you could say, relaxed trading approach. For this year, I've only 17 winners and 13 losers, still about 56%. That's about average. So it's a little bit more laid back on the trading. Now, for $50,000 account size, so the positions that I'm trading based on risk would be, 5 contracts of my S&P trade. So if you look, you'll see very consistent things. You'll see that my risk reward on the trade, all about 1-to-1 through here, if you can read those numbers. So that means for every winning trade and every losing trade, the numbers match. You can see how I am with the number of contracts. Okay? You can kind of see how consistent I am with gains and losses. So nothing really is much different, but I do this only on the S&P. Now this year, and I'm going to be square with you, the last 2 years in the S&P have been kind of mixed. They haven't done extremely well. They're profitable, but nothing where I would, write home. But so far this year, I'm up about 18% right there in the S&P. So again, this is kind of like a two-pronged approach to income trading. The beauty about this is it doesn't use, I don't ever own any stock in this. All it is finding good stocks that are moving in the market direction or using the S&P. I just closed out an S&P trade earlier this week. So all about finding good stocks. So I want to just kind of run an example with you. And the reason I showed you that spreadsheet and all the graphic numbers and all that stuff is because I'm proud of what I do. And the cool thing is I do this trading in front of people in coaching. So it's not like, hey, this is what I do, you can do it too. My coaching is every Monday and Wednesday. These are trades that I take and let my clients know about. So let me kind of explain how this works. Right now, and Steve did a great job at this, right? The market right now is up. So I personally use, and I'm going to give you kind of like, and you're not going to learn everything there is to know about this in 10, 15 minutes. But one of the things that I like to use is I like to use the DEW. Right now, the DEW is up, and it's been up since April 22nd. Now, if you go back to my spreadsheet, take a look at what I've been doing since April 22nd. I've been doing nothing but bullish trades. Before that, doing bearish trades because the DEW was down. So I basically flip a switch and say if the DEW is up, go bullish. If the DEW is down, go bearish. I try to keep things very, very simple. When it's up like it is today, I have scans that I've put in here. Now, I basically, as part of the options paycheck principles, I custom build some scans. I'm not going to use nothing really all that custom built today. I'm just going to use some basic stuff. One of the scans that I love is premier growth stocks. I love stocks that have good growth rates. I like stocks that have good sales. I like stocks that have good fundamentals. And I always laugh at that because if I'd have told you 10 years ago I'd be using fundamentals for my trading, I'd probably laugh at you. But fundamentals are awesome. So we take a look at, I'm just going to look at the first 5 stocks. This is live, by the way. So Hood, AS, SoFi, TPR, Credo Technology. Let's just graph them and see what they look like. Now, I'm going to give you kind of some real-time analysis of these stocks. I have absolutely no issue with Robinhood. That's a good-looking stock, okay? That's the kind of stock that I would like. Now, the only downside of Robinhood, and this is one of my principles, where's at? My next earnings event is coming up, it looks like around August 7th, which is probably right on the border of where I'd want to be. Okay, so not bad, but I think earnings is a little bit too Robinhood. AS, I don't really like this stock because it's at resistance. I'm not saying that AS can't go up, but I'm saying that right now it's at a resistance level here. And why? It's kind of like when you're in a car, right? And you're parked in front of a brick wall. It's probably not a good time to hit the gas. Wait till the brick wall goes away, right? That resistance, in another way to put it, it's kind of like a red traffic light. Wait. If we go through it, hit the gas, then I'll be interested in trading Amerisports, whatever this is. SoFi's been a great stock, but earnings are coming up very soon. Tapestry, that's a beautiful stock, right? No resistance. My earnings, Tapestry, my earnings aren't till mid-August. That's perfect. So I like to have my earnings, probably about 4 or 5 weeks away in the perfect world. So this is a stock that I'd be very, very interested in trading. So what I do from this point, if I like the stock, there's no earnings, everything looks good. And I love stocks that are making 52-week highs, by the way. Those are my favorite. That's another thing that I credit VectorVest for when I got brought into VectorVest 10 years ago. I used to avoid stocks like this. I always was a buy the dip kind of person, and I did that for a long, long time. And there's nothing wrong with buying the dip. Hey, here's a dip in Tapestry right here, right? That's a great place to buy it, but you're missing out. There's other great places to buy that. Why would you wait for a dip if that dip is not going to come for another 3 months? So that's another thing that VectorVest really had a great influence on me. So I like this stock. This looks pretty good. Now, from an options perspective, here's what I would do next. I'm going to look at the probability of my options here. Now, what does that mean? The probability of my options. When I think that a stock is going to go up, I sell a put underneath the price of the stock. Why? When you sell a put, the value of that put will go down if the stock goes up. That's what my goal is. I'm an option seller now, not a buyer. Option seller. So think about it this way. If you've ever bought a put before and you bought a put because you thought the stock was going to go down, but the stock went up and you lost money, well, this is the opposite. I'm selling the put. Now when the stock goes up, that put that I sold will gain value to me because options are tradable instruments. I can sell an option today and I can exit that position next week. It doesn't matter. I can get in, I can get out. If I'm buying an option, I can hopefully get in at a low price and sell it later on for a higher price. If I'm selling an option, I can get in for hopefully a high price and then sell it or exit that trade later on for a lower price. And I get to keep the difference. That's the beauty of this. So what I typically would like to do is look at this, and I would like to find an option that has about a 60% or higher chance of not going what's called in the money. So let me explain this to you guys. I'm giving you guys a nice little run through here of what this looks like. So here's Tapestry, TPR. Okay, oops, I already had the stock open. Here's Tapestry. I'm putting on a white screen. Hopefully nobody goes blind from this, right? So if I sell an option, let's say at $99, right? The stock right now on Tapestry, it's trading at 101. I can go look at an option at $99. So if I were to go out here and sell a $99 put, every option has a probability to it. Okay? So you can do this in Thinkorswim, you can do this in IB, you can do this in pretty much any platform. So if I open up an option chain and I look at Tapestry and I go out to August, well, it doesn't look like there's a $99 option there. You can kind of see them right here. You got $197.50. A $100 option has an ITM percentage of 43.4. That means that Tapestry has a 43% chance of going in the money at expiration in August. Okay? So essentially, if I flip back to the graph, that option, and it's not at 99, there was no $99 option, so I'm going to have to kind of adjust that a little bit. The $100 option, that had I think it was 43%, roughly. 43% chance of going in the money. Bear with me a second. Now, if you don't understand fully what I'm talking about here, it's okay. Okay? Don't get frustrated. Don't get confused. This is the whole idea of me teaching you this from the ground floor. So what that means is this. If I were to go out there and sell that $100 put, the stock has statistically a 67% chance, or I'm sorry, a 57% chance of staying above 100 until the August expiration. Okay? That's a little bit too high for me. I want that number to be lower so I can go down a little bit. What about the 97.50? That option right there has about a 32% chance. That's what I'm talking about. That's what I like to see. Okay? So if I go in there and instead of a 100, if I go down to 97.50, all right, now look what I'm doing. I'm selling a 97.50 put. That option had I think it was what, 33%? If I'm off a little bit, sorry, my number memory's kind of rough. But now what you're doing, is you're creating a situation where if the stock goes up, what's going to happen is that option is going to start losing its value. So looking at that option right now, the 97.50 option has a premium of $2.88. So if I sell that, I'm going to collect $2.88. Now, if the stock goes up, the premium of that option is going to decline rapidly. So I can enter the trade, selling the option, collect $2.88. Then as the stock goes up, I can exit the option by finding a matching buyer, and hopefully I can exit the position for maybe $1.40. When I took the trade, I got paid $2.80. When I exit the trade, I want to pay $1.40. That means I get to keep the difference. Now, the downside of a trade like this is very, very simple. If the stock doesn't go up and it goes down, I can still make money as long as we stay above 97.50. Okay? But if it goes below 97.50, this opens me up for a massive loss. Okay? A massive loss. So we do two things. Number one, we exit the position if the option or if the stock were to fall below 97.50. That's going to limit our risk on the trade. Okay? The second thing that we do is just in case there's a big disaster, I'm also, and this is the highlight of a bull put trade, I'm going to buy an option as protection somewhere down below. Now, I can go into all the details of, what happens when you buy an option, what happens when you sell an option, all the stuff about expiration, but it's not really relevant. We don't keep options to expiration. We don't keep these trades to get assigned. In fact, in 15 plus years of doing this, I've never been assigned an option from one of these types of trades. Okay? It just doesn't happen. You get in at a certain point, you get out at a certain point. But here's what this does. Now, I'm going to show you a couple things on a risk graph. Don't worry about the risk graph details. I really just want you guys to focus on this over here on the right-hand side. Okay? If I were to go out there and sell a $97.50 put in August, remember what we talked about? That gives you a $287 profit. But if the stock goes down to zero, you're going to risk $9,462. Not to mention, if you just sell this option naked, it's pretty expensive. Typically, you have to pay 5% of the option price or the stock price minus the premium. It's expensive. So what we do is we click on Edit Spread. And again, I'm going to add what I call an insurance strike to the trade. Go down a little bit further and buy a put. Now, what that does is it caps your risk. The most you can make on this trade on one contract is $137. The most you could lose is $362. Now, I know that sounds pretty rough, but you don't have to understand a risk graph completely for this. If we're to lose $362 on this trade, the stock would have dramatically fall all the way down to about $75 a share. It would have to drop from 100 to 75 in one day. Essentially, it's not going to happen. Okay. One of the reasons why we stay away from earnings announcements. But what's going to really happen in this trade is we're going to exit it if it goes against us and drops below 97.50. This trade's only realistically going to have about a $75 risk. This is why when you look at my spreadsheet, you can see that my average winning trade is about 750. And my average losing trade is about 760. I don't keep these trades on. If they drop below the price of the option I sell, I exit. Now, this right here is a 15-minute description of 95% of what I do as an income. It doesn't have to be complicated. It doesn't. Those are two trades, bull puts, bear calls on good stocks or the S&P 500. And again, this is what I've been doing here at VectorVest now for 10 years, using the options paycheck model. We're here today because I want to show you a little bit about it. Now remember, if you don't understand everything that you see, it's not a big deal, right? Everybody's got to start out somewhere. Here's what I would encourage you to do. First, keep an open mind, okay? Keep an open mind on this stuff because it is a good way to create income as a trader. Keep an open mind on options because they don't have to be complicated. We can make this easy, okay? Second, if it's something that you're interested in, we are doing some classes starting next week. If you go to vectorvest.com/OP register, we have about an hour presentation that kind of takes you through some of the nuts and bolts of this. We have a little bit more time. And ultimately, if it is something that you're interested in employing, we do have the options paycheck classes that we do multiple times a year. Sign up for it. Keep an open mind. Again, these are trades that we do every single week with our Ultimate Retirement Solution Coaching Group. So, like I said, this has been one of our biggest selling classes here at VectorVest. We have a lot of happy clients. I've got a lot of coaching people that do this with me every single Monday. It's definitely something that if you're looking for an income opportunity trading, even as low as 5-10 trades a month, even if you just do the S&P, trading it 3 or 4 times a month, one trade a week, that one trade is up, 15% this year. So it's something that everybody can do regardless of their time and market. So that's a little bit about the options paycheck. That's a little bit about how we do the trades, a little walkthrough of everything that we do, to finding the trade, the do, and to kind of explaining a little bit about selling options. Let me stop my screen sharing here. There we go. Oh, I think I canceled it, right?
Okay, Ron, thanks for that, man. Thanks for doing what you do. Thanks for being here.
Thank you.
Thanks for introducing folks to options. I think it's great. And guys, listen, at some stage, you got to learn options. There's a whole new world and can really give you some substantial income. Dividend yield is such these days where it just doesn't give you enough income anymore. And selling options is a great way to replace a lot of that lost income from just collecting dividends. So it's great. Thanks, Ron. Really appreciate it.
Thank you.
All right, so I'm going to get on into some of the more relevant current news items. Some of this probably won't surprise many of you. There are maybe a couple of items in here that might. We'll see. But great news for NVIDIA, and I think really for the semi space in particular. So not just for NVIDIA alone. Let that sink in a little bit. It's great for them, but also should trickle into some other spaces like AMD, for example, who might play a little catch up. I'll show you the chart differences when we get there. But NVIDIA could recoup as much as $15 billion in revenue with H20 sales in China set to resume. That's huge news. Awesome, awesome news. Could really help buoy the markets here, and particularly the semis. So we'll look at that. Also, Uber. Big movers and shakers in the Robo taxi arena, and I'm really starting to grow more and more fond of Uber. We really looked at a good trading setup in the trading room we called the Jockey Club several weeks ago when it broke through resistance. And we'll look at that and kind of where it sits now. This is a heavy deal, $300 million. They're given over to Lucid. Lucids are fantastic automobiles too. So it's an interesting play. It's a very interesting play by Uber, because one of the things they were going to be running up against is the quality of the vehicle. So I think it's super smart. 20,000 robo-taxis is the agreement over a 6-year stretch. Yep, it says it right here, next 6 years, as demand for driverless cars kicks into high gear. All right, I'm going to let all of you folks try them out first, and then I'll try them out afterwards. But, it's inevitable, it seems, at this stage. So we'll operate under that pretense until it proves otherwise. I've got questions, but, we'll let all the numbers fall where they may. And these are big numbers, that are starting to be thrown around. So anyway, I think it's really, really good for Lucid because it might, in fact, save the business. In large part. Meaningful business anyway, right? So that's really good to see. I think it also helps Uber, but not maybe as immediately, right? It'll be thought of kind of as a potential drain, unfortunately, at least potentially immediately. So we'll look at that. We'll look at the charts and how those things are stacking up today. This is an AI play that I think is off a lot of people's radar that needs to be on the radar. That's Arista Networks, one of my stronger performers today in my portfolio. Citi looks like they're getting ready to do a guidance upgrade on them, and not too surprised. Not too surprised. Big cloud play here, and super, super good tech. And it looks like they've gobbled up some of the share that Samsung, through some of their mishaps, kind of let slip by the wayside. So Arista figures to be a pretty strong play over the next few months. And let's see here. Kramer, he likes Power Solutions, thinks it's an amazing stock. In this case, we'll see if VectorVest agrees. I think you might find that it will, just to let a little cat out of the bag. But it's always good when multiple sources are all saying the same thing. What I don't like is when somebody says, oh, this is an amazing stock, and then our service says it isn't. Because in my experience, our service is the official word on the situation, okay? At least over the moderate to long term, maybe not the immediate. And also, just a couple of quick comments here. So there's a lot of legislation going through on stablecoins. And of course, Bitcoin is catching some tailwind out of all of this. And there's just an awful lot of ETF exposure that's being garnered here in the Bitcoin arena itself on the back of all of this. So we moved from a situation where we were in a little bit of consolidation. I'm talking about after we came up off of the April lows, of course. And we kind of hit a sideways to down and switched from downtrend to uptrend, and we were really poised. I don't know how many people were in Power Hour last week, for example, here, but we were saying you're on high alert for the breakout then. It was only a day or two later it actually busted loose. And I'm really pleased to see what's happening on the right-hand edge. I don't like for people to get stuck in the weeds of looking at daily charts. It's just going to throw you into a tizzy when you don't need to be. But we were looking like a little bit of tiny head and shoulder pattern growing on us there, but it's been wiped out, which is good, at least for now. So looking strong there. We'll see. They say they've got the votes. Trump says he's got the votes again. We'll see. So far, he's been dead on, even if it took 9 hours of phone calls to get it done. so far, he's led us in the right direction. So we'll see. Jury's out to some degree. And then one you might think about on the stablecoin front, should all this actually go through, is XRP. And I found in VectorVest today, kind of a discovery for myself this morning, we actually have a 2-time lever on the XRP. Not sure you need one, but could be interesting for some folks, particularly if you let this settle down a little bit. I don't like chasing, but this is a nice wedge breakout. It's really, again, kind of a pennant with this nice flagpole coming into the pattern itself. So it looks like there's still some room to run just on pattern alone, but it's off to all-time highs. So interesting stuff. Now let's get into VectorVest and take a look at all this. Let's separate the wheat from the chaff in terms of what is some of the more logical things to really focus on, what are some proven stocks that make money, that keep making money quarter after quarter, year after year, and then what are some of these crazy, more speculative things that we just spouted about there in the last 3 or 4 minutes. All right, so right at the top should be nobody's surprise, king of the hill, the $4 trillion company, NVIDIA, leading the way. And it's good to see that news item come back for them. Obviously, I mean, they're on top of this list for a reason. They're on top of this list because even though they've had some pretty significant deceleration, I mean, my goodness, a $4 trillion company's growth rate is only, Joey, it's only 37%.
Yes.
Can you imagine? I mean, that is staggering. But it wasn't that long ago, it was 90%. You know it? But anyway, sales growth is outpacing growth. That's usually a pretty good sign of things to come. So it looks like maybe we might be starting to turn the corner the other way here a little bit. So all eyes, as far as I'm concerned, will be on that. I've owned NVIDIA for a long time. It's not going anywhere. But I do what Ron does. I like to generate a little income on that booger, these days. But anyway, it's good to see. Good to see all that kind of come to pass. The other ones that we talked about just in those news items, I kind of stopped there. We've got more. I had plenty of stuff to cover the time. I found it interesting Ron talked about Robinhood, so I will go here. I think Robinhood is probably one of the safer ways to play the crypto boom without having to buy crypto at all. Terrific company, strong leadership, growing like wildfire out into Europe. There's some potential roadblocks there you want to keep eye on. But so far, so good. And I've been saying in our jockey club, in our trading room for several months now, that if you want to play the crypto and you want to do so as conservatively as possible, realizing you do open yourself up to other things, they're a brokerage, right? So it's all about inflows and outflows and all that kind of stuff as well. But one would think that this only amplifies Robinhood's already preferential business for anybody under the age of 40, certainly. They're the king. So numbers don't lie, people do, right? So let's just look at the numbers. The relative value is 141. That is excellent. That means their earnings and earnings growth are spectacular. They're excellent rating. You can see they have a measly growth. They're outpacing NVIDIA. Okay, now they're not a $4 trillion company either, but you keep growing at 50% a year, it may not be long, So we'll see where it all goes. But sales growth is outpacing growth rate. Again, that's a desirable characteristic. We talked about advanced micro. One of the reasons I like this is the play off the semiconductor leniency, hopefully, remains to be the case as we get official word on tariffs and everything finalized. If that turns out to be the case, I really like, of course, the leadership here. I think Lisa Su is brilliant. That doesn't matter. VectorVest numbers are turning around. We're looking at the earnings per share down here, and it's really starting to click up in a pretty significant fashion. So I really like this. One of the things we did just a few days back was a trade on AMDL, which is leverage. And you'll see I marked this out for folks so they could get some perspective here. I've identified two patterns for you. One back here, this is an island reversal. That's when price gaps down into an island of price that is solidified when it gaps back up and out, okay? Very, very powerful pattern. Guess what? We saw that pattern. We might have multiple islands here, Joe. We're going to the Caribbean. But it's this one that you care about. And we actually picked up the trade, I believe, on this day here, okay? On the back of that. And realized that there's probably some really good upside potential on this one. I think we've already bagged the 13% and just went ahead and cut it when I was on vacation, which I'm fine with. But I do think it probably still has room to run. Having said that, I also think there could be some weakness before there's resumption of strength. So in the event that you get a gap fill here, which seems somewhat likely, I would look at it again on resumption back to the upside after it fills in even just a few pennies here. Really, 1 penny is all that's required to fix some of that price inconsistencies. There's a better term for it that they like to use. But markets like to fill those early when at all possible. So irregularities. So they do like to fill, be mindful of that. So I would take a trade here either way. I'd take it if it took out today's high or if it came back, filled, and started to rally from there, because that is logical at this point. All right, so let me get out of here. Get back to the list. Keep rolling. Arista Networks, already talked about. So Arista Networks was really good on the breakout, retest, expansion. So really, the logical place to take the trade here would have been around that spot on the chart. One of the things I really like here is not only the breakout retest behind us, but volume coming in. This is the under-the-radar AI play that I was talking about, okay? And they've got room to run towards highs. And I always do this for folks. I think it's a great way to look at stocks, particularly if you're an investor. You see this price up here? You see how much earnings they had in the tank? Look at the price over here, and look how much earnings you have in the tank by comparison, okay? So if we can get to this price on a good market, on that much earnings, where do you think we might be able to get in the future if the market remains good right now, right? All things being equal, you should at least get up within earshot of that, if not surpass it. That's the most likely scenario. So I really, really like what I see here with Arista Networks, and I like the fact that we're not just picking on stocks that are hitting necessarily new highs right now. That gives the market a little bit more comfort as markets have gotten high again, that we're not paying the highest price that they see on the chart right now. So I love that. I love that about Arista Networks, and there's a few others out there like this. If time permits, we'll see. Power Solutions was one that Kramer's really keen on. He said he got too busy taking a look at Caterpillar. So you're dealing with really a multifaceted business here with Power Solutions. I agree. I mean, forget about me. Anytime I say I agree, it's because I'm looking at VectorVest. Things have gotten a little hot. One of the things that you're going to learn about me if you haven't already is I like for price to come back and collect around the 20 average. Now is not an ideal time to buy it. So that'll be the difference between, say, me versus just reading quotes on Yahoo Finance or whatever to get your stock trading ideas, right? I see a little potential reversal pattern brewing right now. So if we can get a little bit of weakness, come back, collect, and get, hopefully a kiss on the average. But if it doesn't kiss and it just starts to do that number, that would have been a good day for me to think about entering, okay? Collect and re-advance. Collect and re-advance. You always want to play the re-advance, not the collect. You don't want to buy on the way down. You want to let it stop going down and start going up again. That is the real secret. If you're just buying it on the way down, a lot of times what happens is it goes down some more and you say, well, I got to buy a little more, and then it goes down some more and I got to buy a little more. I got to bring my cost basis down, right? Well, you can cost yourself all the way into the seller if you're not careful. So don't do that. Let it collect at a moving average something and show some life again. Actually start to move again before you participate, okay? But I do like Power Solutions if we can get a kiss on the 20 average in the future. Look at that double XRP. It's up 18% today. We were looking at it this morning and it was up 9 or 10. It's almost double now. Isn't that something? That sucker is moving. Holy smokes. Look at all that tasty, yummy volume over there too. Trading at the highs. Holy smokes. I don't know. What I like to do with those kinds of trades that have already gone ballistic, if I think it's going to stay ballistic, I just really reduce my exposure initially. And if we can catch a collection at a 20 average in the future, maybe go in a little bit more. But that's not for the 401k account or the retirement account, that one. Well, it is in the small denomination again, If you just did a little bit. Maybe a fourth the size that you normally would. Maybe even less. Be surprised what that might do. Okay? But I really like this play here. Again, I don't love leverage unless it's in a space where there's lots of legislation or some kind of an event that can really catapult the market that you're interested in. I don't like leverage otherwise. So I don't like it after a long run up in particular. You're just asking for trouble. But I do like the semis here. I like it based on what we're hearing. I like the news. I like what we're picking up these days. And so I would just stay unweighted. VanEck Semiconductor, I picked some up today, as a matter of fact. I picked some up just this morning. Okay? So this looks really strong, nice and smooth. It's not pulling away from the moving average or anything like that. It's just going up at that nice, beautiful 45-degree angle. There's not a ton of ebb and flow. And so this is high on my list of something I think I'm quite keen on right now. Okay, if we look at Palantir, I struggle with this one, guys. I got to be honest with you. At the end of the day, you can't fight the chart. People are paying such a premium here, and I get it. I get how big AI, I get it could be 10 times or 100 times the Industrial Revolution. I get that. I doubt that that's going to be the case, but I get it. I get that it could, okay? The 100 times at least. So anyway, there's a hefty premium on this stock, but you can't fight it, and it's going. But 255 forward PE, I never thought I would see that ever in my lifetime. That is a huge, huge premium that you're paying here. And you got to realize that. If they even have a bloody nose, they're going to drop 30% before you can get to it. So just be mindful of that. So it's not my favorite arena, but if you were going to play it, up is the way to play it right now. And it's actually looking like a pretty fresh, sort of breakout candidate. I like it over the short term. I don't like the, establishing a long-term position here, contrary to some crazy people I know on TV. All right, that brings us to Uber, Lucid, and Tesla, a tale of three cities here. Let's start with the one that you got to be very careful of still to this day, and a lot of people just don't realize it. Tesla's in a world of hurt, man. They really are. And I don't like betting against Elon Musk either, and I don't advise anybody do. I just advise you just avoid the situation for now. is probably the best mindset here. Earnings is just fallen off to where it's virtually nothing, and now you're going to lose a lot of the government subsidy, and you're a few years behind other companies like Uber who've already gotten into a lot of these spaces, and you're behind Boston Scientific on the robots. You're behind everything, okay? If there's one man that can pull it off, he might be the man. I'm not going to bet against him, but what I'm not going to do is buy his stock right now. Just not going to do that. Earnings are just falling off of the cliff, okay? And that's the brass tacks. I mean, there's no refuting that. That is the situation. So what you don't want to do is bet that some catalyst in the future is going to turn that around, because you don't know that. And you can't possibly know that, okay? So wait for that to actually materialize. There'll be plenty of potential upside from there. It's a plenty good cult stock that it'll keep going for you when you need it to. But for right now, I mean, the one thing I would also say is when you do chart analysis, you start working from the right back. So I can't do it yet, but if you get 2 down bars, you're going to accelerate that to here. You have to get 2 bars down and out for that to be an actual pivot. But if it is, this is then starting to have a little bit more of a bearish tinge to it. The highs are coming in egregiously lower than the lows are going up, okay? So that's a bearish wedge by nature of that's beginning to brew there. Now, it's unfair to draw that right now, which is why I didn't draw it right now. But if you get 2 down bars, you can draw it, okay? And then if you break the floor, it could move remarkably lower from there. So just kind of keep your eye on that. And then finally here, and then I'll see if there's any questions we want to get to, or maybe even graph one of your stocks or something like that. But we've got Uber. We talked about a tale of 2 different cities. So Uber's coming back, collecting near a 20 average. You've got beautiful, so you got earnings going one way on Tesla. You got earnings going completely another direction here on Uber. And actually, every earnings announcement, they're actually picking up speed, is what's been happening here. So where did the $300 million come from? It came from this company is on fire right now, okay? So this might be a good one to look at. You've had 1, 2, 3, 4, 5, 6, 7 straight down days. Last time you went through this, you at least got a little. So if you're a trader, you might be looking for a potential turnaround in the share price here pretty quick. I'd look at a buy if it gets back above that 20 average as a potential trigger. First things first, we want to hold around here where we are. Okay. All right. So that's that. And then Lucid. I don't ever jump into stocks that are up 37% in a day. I think if you do enough of those trades, you'll know why too. But I do sort of like the pattern here, to be honest with you. At least early, this thing did what's called a breakaway gap, where price opened prior, above the prior swing high, which was a good distance from the share price on the stock. That's very bullish. Look at the volume. Oh my, Joey, you see that? Can you read that number? It's off the charts. 800,000. Is that 800,000? 800 million? 800,000. 800 million?
Yeah.
800 million shares? Holy. Maybe there might be a squeeze start. I don't know if that's a short squeeze candidate or not. But I wouldn't be surprised with that kind of, I don't know. We'll see. Anyway, look, I'd be focused on Uber. I think that ultimately they're probably the biggest winner if we're talking about autonomous vehicles and autonomous vehicles alone. They're starting to look like a pretty good bet. All right, let's see what kind of. Say again.
Let's look at 5 of their stocks.
5 of their stocks. All right, put 5 of your stocks in, and while you're at it, give us a big ooh-ee for Glenn. Give us a ooh-ee. Or not. I mean, just nobody wants to participate, Joe. Is that CRWV? There's a ooey. Nice. CoreWeave. CRWV is CoreWeave. What else do we got? OOII. Is that Applied Opto? OOII.
Separate all these? You know which one's yours.
Let's see. Or maybe that was a OOE. BTU. BTU. That's Peabody Energy. I know that BTU. OSOL. Okay. Or maybe that's GSOL?
GSOL. You want me to give them to you?
Yeah.
UAMY.
Oh, man. Okay. We got some gamblers in here, Joe.
And Lulu.
Lululemon. All right. So that's the 5, right? Let's see. We had Lulu. We had CoreWeave. We had uh-oh, I got to go down.
Keep going up.
I got to go up. Where'd they go? I missed some of them somehow.
I can't see the ticker, so.
There's Peabody.
Then you had C, his city, didn't you? And
No, but I can put it in.
you had CRWV.
I got it. And what was the other one? Lulu. Lulu. We didn't. Yeah, we were doing Lulu. I'm gonna try to remember the ones that we said because they're gonna get mad. They're gonna get mad at you. So I'm gonna try to keep them happy with you, Joe. All right, I got them in. And there was one more.
USAY is the second one.
There it is.
Yeah.
We got it. All right, let's look at these suckers. We're going to look at the charts first because charts don't lie. People do. Woo-wee. That's a nasty chart, man. Well, you know, this is an IPO. And one of the things you got to understand is the smart money, they got their price, then everybody got the IPO price, and now you got the current price. And it's getting worse as you go. So they're probably going to grow into these numbers at some point. I mean, it'd be dumb to bet against CoreWeave 10 years out, okay? Or even 5 years out. But it's probably not a pretty good bet right now in the first several months to follow where we are, just because prices got way out of whack. I mean, that's the bottom line. That's kind of what happens with these IPOs. They get run up like crazy. There just isn't enough fundamental data to suggest these kinds of prices. So you saw this with like Roblox. You saw this with a lot of stuff. And, you know, Roblox went down to about 40 before it started going back up again. You know what I mean? So I would be patient here. Bottom line, you got to at least get back above the 20 average before you start even looking at it on CoreWeave, okay? Right now in VectorVest, you got to hold. Good news is we don't have a sell yet, but it may not be long, okay? So I don't love it. Now here's, we talked about gaps earlier. It's come back and filled the gap. So those of you that want to remain bullish near term, maybe gap filled and we're going to start rising off that. But again, your trigger would be something like getting above that 20 average, okay, at the minimum. Otherwise, we're still down, okay? Let's go to the next one here. BTU, big day for BTU. I actually like what I see here, a pretty good bit. This is coal. Well, there was another stock, another coal stock up pretty good today. We saw earlier this morning. Ramco Services. So it looks like the whole industry is on the rise. You know, there's an energy crunch out there. I mean, nuclear has to be the future. I mean, to run all this stuff they're talking about, guys, you know how much energy it takes to run one quantum computer? Do you know how many quantum computers there are in the world? There's like just north of 50. You want to know why? Well, they're hard to build, but the energy that's required to run these things, you know, there's just not enough energy in the world to do all this stuff they want to do. Autonomous automobiles, and quantum computing, and AI, and server farms. I mean, you should see the people over here in the country where I live. They are up in arms about a data center coming in. You know, but they just need so much resource to do all this stuff. I don't think any energy is off limits. So anyway, looking at BTU, I like to move above these prior swing highs. This is a breakout candidate. Volume is pretty good. Earnings aren't there. Coal's a tough one to read with that. It seems like they do pretty well in spurts, even when earnings aren't necessarily backing up the equation. So just technically, I like the break. It's a good break. I would think about it and forget about the earnings for now. But what we really would like to see is a little bit more volume work its way in there if possible. But other than that, it looks good. That one looks good on a breakout. Lulu. Oh my goodness. Lulu is down. Lulu is down to 232. All the people on TV are telling you not to buy Lulu. They're giving you all the reasons as to why they feel that way. At VectorVest, we like just going with the raw numbers. What I do see is a business that has significantly begun to slow down. So that is for sure. Whether or not all those other businesses that they keep referring to are really taking a lot of share here, who knows? The numbers suggest things are just kind of holding serve for Lulu. That's not really going to create a lot of excitement on Wall Street, but at the same time, maybe it's not as bad as they thought. Maybe this is a turnaround story here at some point. But as we look at it today, I will tell you the thing that I see on the chart, potentially, now that you have the full picture, and I'm going to tell you when it actually is tradable. Buy the book. I don't do anything but buy the book, okay? That is a potential double bottom. Somebody's going to say, that is a double bottom, Steve. I've gone long, Joe. Are we okay? I'm going to wrap it up in 2 minutes. That is not a double bottom yet. Double bottoms do not trigger till they take out the interim high. So, should Lulu get above 250 on some thrust, on some good volume and some good price bars, I like Lulu here on that pattern. Generally speaking, then, your target, which can also be derived by the pattern itself, would be the height of the pattern, okay? And that would take you back up into a gap fill. That seems likely. Don't rush it. Just because I said it seems likely, don't rush it. Let it happen. Let it happen naturally. Get yourself a nice gap fill trade, and that's it. Don't push that any further. That's it. That's the final word. All right, Citigroup, nice, looks great, terrific, good job. UAMY, struggle city, man. It's going to struggle up here, and I'm not sure that it's got the earnings to actually put through, nor the market. If this earnings season continues to go strong, nobody's going to be buying gold stocks. I don't care what's going on. There's better places to be. And that is Trending Thursday, Joe. Take us home. That's going to be it, people. Thanks for being here. Thanks, Ron, for being here with us. Thank you, folks, for being here with us today. We definitely gave you your money's worth. And so we'll see you next time. Good luck out there, guys. Good luck. See you soon.